Hello and good evening, everybody. Hi, Amarjit. Hello, Jatinder. Welcome to tonight's session on SGX Tuesday. So we're gonna basically look at Singapore stocks and how you could actually use charts to identify opportunities when price starts to dip. So I'll start off with the educational part first. All right, where I'm basically just going to share you some ideas on why do we want to buy when the price starts to dip, right? Instead of buying when the prices are going up higher. Okay, because most of the time, a lot of investors, a lot of traders normally buy when the prices are going up. Okay, we call it chasing prices. Okay, and I'll show you examples. So you can look at examples yourself later on most counters, right, where you can see there are a lot of traders actually buying on highs. We all know that we are supposed to buy low and sell high to make profits, right? But it's always easier said than done. So I'm just going to share you some examples on why this happens most of the time, right? It happens over and over and over again. Okay. Hello, Rasmawi. Welcome. Okay, let's just share my screen. Okay, so so the first few part is pretty much educational, right? And then we're going to take a look at examples on the SGX stocks. So today's session is called buying on dips. And of course, the only way to find these levels of prices where you look for opportunities, right? When the price starts to dip in an uptrend, is by looking at charts, right? Because if you don't have a chart, it's like basically we don't know where the prices are. Okay? In relative to the historical prices. Okay. Hi, Sharul. Welcome. Okay, so as usual, before we start, whatever that's being shared here today is for educational purposes only, right? It's not intended as any investment advice. So if you want to look for investment advice, please do look for a professional and licensed investment advisor. Okay, so we are here. Although I'll be showing examples on the Singapore shares, but we can't apply if we don't show any shares. So we're going to take a look at those stocks, just an examples. All right. And if you guys want to look at any stocks or any counters in Singapore, then we can take a look at it. Anyways, in technical analysis, it's not only applicable in one market. So the good thing about learning technical analysis is you can apply it on other markets as well. All right, whether it's stocks, whether it's futures, whether it's commodities, whether they're cryptocurrencies. All right, you can actually apply them the same principles. All right, in using charts to find opportunities when the price starts to dip. Okay, so this first part is going to be a little bit educational, hopefully to give you an idea, right? Why, which levels are less risk when you make a trading decision, right? Because in technical analysis, or even if you learn fundamental analysis, the whole idea of learning analysis methods is basically to find a low risk buying opportunity, and of course, we also need to know how to sell to book your profits. All right, so buying and selling is basically trading. Whether you are trading in the long term, you still have to trade. All right, even in investing, you also need to trade. You need to know what price to buy and also how much to buy. All right, and of course, when you want to sell, you also need to know what price to sell. Okay, so if you can use both of them, then I'll also mention to you why we use technical analysis. All right, if you can use both of them, of course, you will be much better lah. Okay, so basically what we're gonna take a look at is we only have about an hour or so I can't really go through all the indicators. In fact, if you want to go and learn further, we have actually a workshop or a class, all right, for learning how to use technical indicators to come up with trading plans. All right, so this will give you an idea. So technical indicators is all about finding the right price and the right time to buy. Okay, it is not 100% foolproof, but I'll show you an example later on. If you are able to have the discipline to follow it, then you should see some results. All right. Once you have an idea, then you know why. I personally use a lot of charts, even when I look at trading or even investing. Okay, so I'm not going to cover a lot of indicators. We're just going to take a look at a very simple trend line, right? And how you can actually identify them. But of course, markets are more complicated than that. So we have to explore further, right? But this is basically to give you an idea and how you can identify this, or using this concept to identify opportunities in the Singapore markets. All right. So we're going to talk about a bit about passive and active trading. Okay, passive are normally for longer term investors where they want to buy and hold for the long term, right? Which is nothing wrong. Okay, if you buy a good company over the long run, the price should go up and you should be receiving dividends. Okay, so it's long term. You don't make decisions very often, whereas as a trader, you make probably more trading decisions. Again, depending on how active you are as well. Okay, there are people who trade intraday, meaning buying and selling within the same day. There are people who trade within a contract period, like 2 days, right? There are people who trade within a week, within a month. There could people be trading even like once or twice a year. So depending on the time frame that you looked at, all right. But as compared to a passive longer term investing, where normally we'll just adjust portfolio like every quarter or every 6 months or every year, so it's less active. Okay. In investing, we don't really time the stock because you have a long-term horizon. And we all know that if the company is doing very well, in the long term, the price should find its value. Okay, so in the long term, the price should be going up. Okay, so they don't really try to time the market very much. Okay, where if you are in active trading, you need to do a little bit of timing. That means you need not timing is not about when to really get in. Okay, it is about finding the right price to get in, and this can happen any point of time. Okay, if I do a timing on stock, for example, if I look at a stock, I say, you know what, I think the stock can only move 5 days later. Okay, so we are trying to time the stock. Okay, so we are in technical analysis, they are both, right? If you look at the two axes on the chart, is time and also price. So we have to look at both. Okay, so the main analytical tool, of course, if you want to go for long-term investing, and if you want to hold for long-term and buy and just hold, then you need to have fundamental analysis. You need to know whether the company is doing well financially, and of course, you also need to look at the business aspects and also the sector they are in and so on, right? So we look at this to find out whether the company is good and whether it's belong into a sector that is growing. Okay, whereas technical analysis, if you are investing, you, of course, the main tool that you will the tool that you'll be using is also fundamental analysis. But because you want to be more active in getting or take the opportunity or take advantage of the short-term movement or volatility, then you need to be a little bit more active. So you need to have this skill called technical analysis. All right. So passive, of course, there are capital gains and dividends because if you hold over the long term, you also get dividends, whether it's quarterly or half yearly or yearly, right? But if you are a trader, your main objective is basically capital gains only, right? You don't really care about dividends. You just want to buy low and sell high. Okay. And of course, if you are passive in investing, your returns are expected to be lower as well because you are buying in the content in the long term. And I'll show you why, all right, later on the chart. Of course, when you're active trading, their returns are expected to be higher, but of course, the risk will be higher as well if you do not know what you're doing. All right. So if you guys have any questions, all right, just put the questions up. Okay. Hi, Chua Meng Soon. When Technical Monday is returning, we'll see how lah. Hi, Jackie. Good evening. Okay. One of the things that we have to slow down Technical Monday is because it could be deemed as an investment advice. All right. Although we know that we only apply technical analysis and just do an analysis without any buying or selling. But again, we have to basically wait for a better guideline from the SC. Okay. All right. So now, if let's say you are investing in the long run, right? The red line that basically represents in the long run the price to go up. And let's say this is a 5-year time frame, okay, or maybe a 3-year time frame. So you buy and hold, the price goes up from $1 to $2. Okay, so you make 100% return. Okay, if you're holding in the long term. Okay, but of course, price don't go in a straight line, right? In the short term, there are volatility. So we have this blue line here that forms that volatility on the chart, right? So in order to maximize returns, okay, even though if you're investing, you know this stock is fundamentally good, is fundamentally sound, you want to buy the stocks, and you buy and hold, for example, in the long term, you can make 100% returns. All right. But if you are able to take advantage of the short-term movement on the chart, right? And here I'm assuming, okay, and of course we can't do this all the time, but I'm assuming that you are able to buy, let's say, at $1 and then sell at 140, and then the price comes down to $1. Let's say you buy back again, and then you sell at 160, you buy at 130, and then you sell at 220. Okay, and of course, this has many different strategies, lah, right? If you're investing in the long term, for example, if the price goes up from $1 to 140, you don't sell everything. You probably sell maybe, let's say, 30%, because you want to hold long term, right? So you sell 30%, and when the price comes down back again to maybe $1 or near $1, you buy back that 30%. In fact, you're able to buy even more shares because you're buying at a lower price. Okay, if you're able to do that, right? So whenever the price comes down, you are able to buy back again. And if you're let's say you're able to buy at 1 and 140 and sell at 140 and buy at 1 and sell at 160. So if you total them up over here, that there's a potential to make $1.90. All right. Instead of making $1 and just buying and holding, if you're able to take advantage of the short-term volatility, then there are more opportunities where you can make money. All right, can make profits. So in this case, if you're able to buy the lows and sell at the highs, there's 190 as compared to the $1 profit. Okay, so even if you don't make, you're not able to buy at the lows and sell at the highs, and if you just make 50% of it, all right, is actually additional already. Okay, so the goal, right, in using charts, okay, to trade is basically to buy low and sell at higher price. That's the objective. Or even if you buy at higher prices, if you can sell at even higher prices, then of course you also can make profits. Okay, but in any case, you need to know when to buy, when's the best time, okay, and the right price to actually buy and also sell. And that's where we need technical analysis. All right. Okay, so now let me just give you an example, right? We all want to buy low and sell high, but why do most of the time people buy at high here, for example? Okay, and of course, if you are if you buy at a high, if the price goes higher, then that's fantastic. Okay, but what happens if it comes down, right? And most of the time, price, when the price really gone up at a certain level, which we call overbought, the price normally starts to come down. All right, and that makes your risk a little bit higher. Okay, I'll show an example later on. Although our trading plan is to buy low and sell high, but the question is, will we be able to buy when the prices are falling? Okay, because it always makes sense when the prices are rising, not when it's falling, right? And I'll show you later on some examples, whether it's Singapore stocks or Malaysian stocks or US stocks, you have the behavior of the market is still the same. Okay, and you can see where normally investors or traders start to buy. All right. Now, most of the time, we buy high, and in order to understand that, we have to understand the characteristics of the buyers and sellers. Okay, some of you have already probably gone through my program. You already know this part here, right? It's all emotional. It's all about market behavior. Okay, we are all humans. Okay, we have this thing called the herd mentality. That means we have to go in groups. Okay, so simply said, it will be safer, right, if we go in groups rather than going alone. Okay, just an example, like we have Brontok here saying CKT effect. Okay, Char Kway Teow. Okay, now I'll give you an example, right? For example, if you go to a place where you want to look for Char Kway Teow to eat, right, and you have not gone to this place before, and you have two different shops, selling Char Kway Teow, which shop do you think you will go to? Now, of course, you can always look Google and look at the ratings, right? But let's say you don't have Google, okay? Which shop do you go to? Yeah, we will look for the shop that has more customers there, isn't it? Because it makes sense, right? The food must be good, and a lot of people go there. Okay, so that kind of mentality, that kind of concept can actually be quite detrimental in trading. Okay, in trading, we are not supposed to follow those who are chasing prices. All right, so let me give you an example. So buyers are the ones who always want to buy at lower prices. Okay, I mean, of course, initially they say they want to buy at lower prices and sell at higher prices, but most of them want to buy at lower prices. So even if the price goes up, right, goes up higher and higher, for some people who buy the shares, they think that the price is still low, even though the price gone up. All right, because it really depends, right? Because the market is really interesting, right? You can have many different opinions in the market. Okay, some of them can be really bullish, some of them can be somewhat bullish, some of them can be a little bit of cautious. All right, so it really depends. So buyer also have very optimistic, less optimistic, and maybe just a little bit cautious. Sellers are the same as well. Okay, some of them can be really aggressive, right? Some of them are less aggressive. Some of them says, you know what, maybe I'd be cautious. I don't want to sell so much also. Okay, so really, everybody have different characteristics, and that's what make the market interesting, right? And of course, the characteristic of a retail buyer and a seller is also different from an institution buy and selling. All right, the gameplay is totally different because they are managing funds, big funds, whereas if we are a retailer, we are managing our own funds. Okay, and the objective may be different. All right. So buyers normally want to buy at lower prices. A seller wants to buy at higher prices. Okay, that's the characteristics. That's the main characteristic. All right. Okay, Brontok says he's referring to Alvin's string theory. Okay. When you say CKT, I always think Char Kway Teow only. Yep. Okay. Anyways, so now let's say like now we are in the market that now let's say we are all buyers. Okay, we all want to buy this particular share. Okay, and every buyer and seller, they always have a price where they want to buy and sell. For example, let's say I want to buy this particular stock at $1. Okay, and we look at the market, the queue. Okay, the buyers and sellers. You don't see any sellers at $1. The best price that you can see the sellers want to sell is at 102. All right. So and I want to buy at $1. So I think, you know what, maybe I'll wait. Okay, I wait for the price to come down to $1, then maybe I'll buy. Okay. So we wait, and then suddenly the second buyer comes in and they buy 102, and there are more people buying at 102, and somehow 102 is finished. Okay, there's no more 102. Okay, and now the sellers come in and says, you know what, I'm going to sell it at 104. So he'll be thinking to ourselves, I want to buy the share, but I'm still stuck at wanting to buy at $1. Right? And then I'll be thinking, should I buy at 104, or should I wait for it to come 102 and buy again? Or maybe I just stick to my plan, right? I want to buy at $1. So wait for it to come to $1, and then another set of buyers come in and buy at 104, and 104 also finish. Okay, and now you have this seller only wanting to sell at 106. And then you say, you know what? I should have bought at 102. Now, how many of you have experienced this before, especially when you're looking at the market, when you want to buy that particular counter and you open the buy and sell queue order, right? The market depth. You can see the prices. You can see a lot of people parking to buy and parking to sell, and the price keep on getting higher. And here we are unable to buy that share, and the prices are going up. All right. It says, I should not be buying high, right? And the prices are already going up 6% from where I want to buy. It's quite a lot. Okay, so maybe I said, wait for a while. So while waiting, again, another buyer come in and buy at 106, and now 106 also finish. Then what do you do next? The seller comes in and is going to sell you at 108. Okay. And then here, because we do not want to miss out, right? Because the longer I'm going to wait at buying at $1, I may not be able to get $1, because now the price has already run to 108. Okay. So what's going to happen here is maybe I'll cancel my order at $1. We just buy 108, right? And see what happens, because the price keeps going higher. Okay. So then I'll tell myself, you know what? Okay, let's buy at 108. And that's the reason why, if you imagine if you are the only buyer, okay, imagine you are not the only buyer. There are a lot of people who actually think this way as well. You miss buying at the price goes higher. You miss buying the price goes even higher, and it keeps on getting higher. And at the end of the day, because we have the fear of missing out, okay, where everybody starts to make money, and then we start think, you know what, I think I should buy. Okay, so that's what happened normally in the markets. And interestingly, if you really have time, especially in the morning, because in the morning is the time where it's most irrational, right? When the prices are really volatile, you can see the queue go up, go down. You can see people canceling the buy orders earlier and then buy at higher prices. You can see all this happening. Okay, this is just to understand the behavior. And you know what? If you look at this pattern, 20 years ago, 30 years ago, 40 years ago. Of course, I only traded like 20 years ago, so I can only talk about 20 years ago, right? The patterns are the same, all right? You can see this thing happening over and over again, okay? So, like I said, it's always easier said than done, right? When prices are going up, it makes sense to buy because prices are going up, okay? Like for now there's also a frenzy in the cryptocurrency market, right? Everybody's trying to chase prices as well, because Elon Musk suddenly become like a mover, okay, and shaker in the cryptocurrency market. Okay, and now crypto is already above 40,000 US dollars for Bitcoin. All right. So question is, will we be chasing the prices? Again, we have the fear, right? Because everybody has bought crypto before. They say, well, you know what? I made money. I made 20%. Not so in the crypto market, there's no such thing as 10%, 20%, right? It goes up 50%, 100%. Okay, just a year ago, the price of Bitcoin was only trading about $6,000 to $8,000, and now it's 40. It's already gone up how much? It's already gone up 4 times, 5 times, 6 times. Okay, and then here we are thinking, hey, can I buy? All right. So again, you need to know when to buy, isn't it? Okay. So most of the time we'll be chasing when prices are higher, when prices are going up. I already give you an example earlier. Because of that fear of missing out, right? Everybody goes in. I'm the last person to go in, cannot lah. So I better get in, like hoping the price can go higher. Okay. Now in this example, if the price starts to come down, okay, it starts price to come down, and when the price starts to come down, you'll notice one thing, right? Because earlier part of when the price coming down, you can see a lot of volume, high volume, because people are selling. Those who bought earlier, they're already starting to take profits, right? But the volume starts to dwindle down, okay, as prices start to come down. Okay, and then you'll be thinking, you can buy, because prices are going down. You see, the momentum is going down. Everybody is selling, and you look at the charts, you look at the monitor, right? The buy and sell spread. You see that people are keep on throwing, and you're thinking, oh, how to buy, right? Because if I'm gonna buy here, I'll be afraid that the price can even go lower. Okay, so the question is always this, right? When the price comes down, when is the right time to buy? Because if it comes down to this level, the price can go even lower. What if it goes even lower? All right. So we always have this fear, right? When prices are rising, it makes more sense because it is rising. We ride on the trend, right? It's just going up. Okay, but when it's falling, it's not that easy. Okay, because the momentum is going down. People are selling, and again, because when a lot of them are panicking, they are selling. We also have this panicky feeling, right? Especially if you buy the high lah. Okay, and the price start to come down. So the question is, how do we get in here? Okay. Now, let's just give you an idea, okay? Now, imagine if you are able to buy this low. Okay, what's the advantage of you buying here against the other traders who probably bought at this high here? Okay, which one is better? If I'm gonna ask you right now, right? Which one is better? Buying at this high here, chasing those prices when it's going higher and higher and higher and higher, right? Or waiting for it to go down? What do you guys think? Okay, Brandon said hood and price fall. Okay, yeah, Shasindran, Sharul. Okay, so if you look at this, you see this happening most of the time, right? Okay, so now imagine those who bought the. I have to mention, right? Most of the traders buy at this high. Okay, again, I'll show you examples. I show you proof. Okay, imagine those who buy this high, right? And when the price starts to come down, okay, what do you think those who buy at this blue arrow here? What do you think will be in their mind? Okay, some people probably average it down. Okay, maybe if the price, if it comes down and he want to basically invest in this particular stock in the long term, as long as the company is good in the long term, they make money, they can average down, right? But what happens to those who trade short term? Okay, if they buy at this blue arrow here, when the price comes down, they'll be thinking when to sell. Should I sell? Should I sell or not? Right? And then the next day, you say, you know what? Maybe I hold today, and then tomorrow it goes down some more. Right? Whether this is and this can happen in any counter, right? Whether and today you can see in the glove sector, right? In Malaysia, you can see prices keep on going lower. So the question, those who bought at this high here, they'll be thinking, when should I sell? Okay. And the price keeps on getting lower every day. If you don't sell today, tomorrow it goes lower. And then your losses gets bigger. Tomorrow it goes down some more, your losses get even more bigger. Okay, so when it comes down here already, then you'll be thinking, should I cut loss or not? Should I just get out? Okay. So you imagine if you buy here, at least when you buy here, okay, you'll be happy that you did not buy at this high here. All right. And you have to think, what would these traders think at this kind of price here? What will they be thinking? Will they start to sell and exit, right? Or will they buy? Okay, so two scenarios can happen here. Let's say those who don't buy, don't sell. They keep on holding, right? They bought at this price over here in the blue arrow. They still continue to hold until today. Okay, and there are maybe half of them, or maybe 60 or 70% of them, probably says, you know what, I give up lah. It's going down, so I sell. Okay, so those who sell, of course, when it comes down here, they really lose money, right? Those who don't sell, they lose money on paper because they are not realized yet, right? So they lose money in paper. So if the price goes up, at least I can still make back the money. Okay, so let's say those 60% or 50% of this sold, they really lost money. Now, what about these 50% guys? Okay, and let's say you are able to identify an opportunity to buy here. Okay, let's say we buy over here. Okay, I'm not talking about those who bought here already. Let's say I'm going to buy here. Now, if the price starts to climb higher and go back to the same level, okay, if they go back to the same level, if I bought this price here in the green arrow, I could already make profits. I'm already in the money if it comes back to the previous high. But those who bought here, even if the price comes back to the previous high, they still don't make money. They just break even. Okay, the price have to go even higher, then only those who bought over here are able to make money. Okay, so that's one scenario, right? When the price really rebounds and it goes up. Okay, now what happens if you buy here? Okay, let's say the green arrow and price goes down. Okay, one of the things that in trading is that whenever we buy, okay, for example, if you are using charts like this, if you have a trading plan, whenever we buy, we expect price to go up, right? We expect price to turn because we expect that price down there to be the support level, and the price should not be going down at lower than that. Okay, but what happens if I buy and then suddenly the next day the price goes down even lower? Okay, so if you have a trading plan and if the price goes down and it's not going up like you expecting, then I will cut loss, right? I'll just cut immediately because the price did not go up. Maybe the next support level is down there. I'll try again later, right? So I'll get out first. Now again, if I'm going to buy the green arrow and the price, let's say, goes down some more, and if I take a loss, I cut loss, I'll only take a small loss. Okay, but what about those who bought here? And the price go even lower. Their losses gets deeper and deeper. All right, so the advantage of buying at this price, yes, we may be wrong, okay, but if you are right, the opportunity or the potential profit that you can make if the price does continue its bullish trend will be much higher than your risk. All right, later I'll show you the chart examples lah. Some of the simple trading plan that you can use. But the question is, do you have the discipline to follow only or not? Right? Yeah, Dr. Koo says, yeah, you have to change to long-term investment strategy. All right. Yeah, so in trading, right? So, a lot of people say they want to become a trader. They want to become a trader, right? But the moment you turn your trades into long-term investing or long, because you do not want to lose money, right? You just hold. Then you have failed becoming a trader because maybe we don't have the discipline, right? So for me, I don't like to chase prices when they're going higher. If it goes higher, doesn't matter. Let it go, right? Because there are a lot of other counters that I can find opportunities. Okay, I'll always prefer to buy when prices start to fall, or when prices move into a correction or sideways correction where it form patterns. Okay, and then wait for a breakout. Okay, in any case, you need to have a trading plan. All right. So so today's example is all about buying on these dips over here, and how you can take advantage of these dips. Okay, so the good thing, like I said here, if the price goes down, your your loss will be limited. It's quite small, okay, but your potential profit will be higher as compared to buying when the prices are high. Here, your risk can be very high, right? Because when the price falls, it can fall very steep, right? And your potential profit, in order for the price to go even higher, all right, it takes a lot of effort. Okay, so the potential profit that you are able to make when you buy the high is smaller, but your risk will be bigger. Okay, so give it some thought. Okay, so this is basically the concept, right? Now, I'm just going to basically show you very simple concepts, lah. Okay, the thing is that sometimes people think that they always want to buy before the trend starts. Okay, when the trend really starts to move, when it goes higher and higher and higher, you'll be thinking, hey, you're so high already, lah, right? I want to buy when the price just starts to trend. But how can we still buy when the trend has already developed? Okay. Now here is where we can apply a simple tool called a trend line. Now a trend line is a linear method to identify the next support level. Okay. Now, if you want to buy, would it be better if you buy near a support level, right? Because a support level is when price, it attracts a lot of buyers, and the buyers will start to buy at that price. Okay, and then it's unable to go lower, and that forms a support. So if you are able to buy near that support level, it is of course less risky. That if you know where are the support levels. Okay, for me, the most important levels on the chart is the support and resistance level. Okay, if you can find those levels with high confidence, with high accuracy, then trading becomes so much easier. Okay, so trend line is a linear method, is a straight line method. Like for example, if you look at this pattern over here on the price movements, right? The moment it comes down to $1, what happens? Okay, it will be attracting a lot of buyers. The buyers start to come in again, buy, prices go up. Okay, and then it goes to 120. And then whenever it comes near 120, the price are unable to go higher. It attracts a lot of sellers. The sellers come in, and then the price cannot go up. The price comes down back again. Okay, and whenever the price comes down to $1 again, it starts to rebound back again. So it looks like the price is trading in a range between $1 and 120, right? The support level at $1, the resistance at 120. Okay, so this is the current pattern. Whether this pattern is going to continue, again, that's the risk that we have to take. All right, because the price will not be able to just go sideways until eternity, right? There are times when the price starts to break up or break downwards. Okay, I'll show you examples later on. Okay, when we look at Singapore shares. So, like here, for example, the only conclusion that I can make from this particular chart is that I know that there's a support level at $1. So if the price, okay, I will only start to buy when the price comes down near $1, because that's where the support level is. I'm going to expect this support level to be there in the future as well. Okay, so we draw a trend line here, right, that connects this bottom here. Okay, of course, this is a sideways trend. Then as long as the price stays inside this range, that means it's still going in a trading range or a sideways range. Okay, I will know that I will not buy at 120 because I know that there will be attracting at 120. At 120, it will be attracting a lot of sellers because it did before previously. So that 120 is a resistance level. So imagine if you know for real, okay, the support and resistance levels, okay, at $1 and 120 is the resistance, then wouldn't trading be easier, right? Because I know that I just have to buy at $1 and then sell when it goes near 120, buy when it goes down near $1 and sell when it goes near 120. All right. Okay, but what happened? The price don't move sideways in the future. Okay, so that's where the risk is. Okay, but in any ways, okay, it is always lower risk to buy when the price is lower. I already give you an example earlier, right? Rather than buying when the prices go up here. Okay. Now, what happens if the price goes into an uptrend? Okay, where the lows are getting higher, the highs are getting higher. So again, the trend line is a linear method, right? Here you can also look at the mathematics here. $1 was the previous support, and then the new support level is at 103. You see the support level don't change in a bullish trend, right? The support level gets higher from $1 to 103 to 106. Okay, remember I give you the example of buyers chasing prices, right? Because if you're just going to wait for a price to buy at $1, okay, in a bullish trend, we will never buy, or we will never be able to buy at $1. We have to be willing to buy at higher prices to get in. Okay, as long as the bullish trend continues, you have to continue to buy at higher prices. Not this high price, but at least when the price pulls back in a downtrend. Okay, so this forms a new support level, $1, 103, 106. So if you just look at this linear manner, you can guess what will the next number be, isn't it? Right? So $1, 103, 106 is every 3 cents difference. So the next support level will probably be at 109. All right. And resistance from 120, 123 to 126. So the next resistance level could possibly be at 129. Okay, so or you can just draw a trend line that connects those lines, because this support level moves into a linear manner. So like I said, when we apply trend lines, it's basically finding support or resistance levels into the future in a straight line method, in a straight line manner. And of course, in real markets, the price don't move really that straight line, right? So that's why we need some other tools to identify where are the possible support and resistance levels as well. Okay, so now I'm just gonna also share with you. I think some of you already know, if you're a Genius subscriber, you know what are tradable stocks, right? Now, if you compare the Malaysian market and Singapore market, the Singapore markets has less volatility, right? I'll show an example. I'll give you a reason why. Okay, now if you want to use technical analysis, okay, there's one main criteria that a stock must meet. Okay, the first main criteria is basically volume. Now, technical analysis is all about analyzing price behavior or market behavior, and it can only be in a real market, okay, which is not dominated or not manipulated by a player or a group of players. So when we are trading high volume stocks, okay, and normally high volume stocks are not easily manipulated. In order to move the price, okay, you need more money. Okay, you need more money to move prices. And of course, if we have all the big funds, they can move prices, right? But we are talking about those big guys, and markets, however, they are manipulated, whether by the small players or the big players. Okay, but smaller players, that's where you don't want to fall into the trap, right, of getting into a stock that is manipulated by this group of investors who are there for their own benefit. Okay, and they can do that easily if those stock volume is very low, right? Because you don't need so much money to move prices, because this stock has not been trading a lot. Okay, but the stock that is trading a lot, then and a stock that has high volume also indicates that there are many players or different players in the market. Okay, so in order for technical analysis to work more accurately, you need to have a real market with a lot of players. Okay, but not represented by a few players, because if a few players dominate that particular stock, then they are creating the charts. Okay, and they can manipulate you. All right, so that's what we don't want to happen. So one of the main things for technical analysis to work is that the stock needs to have good volume. All right, so we need to have good liquidity. Now, if you are looking for stocks to trade, okay, remember I told you about, if you know, in the first slide earlier, we have a long-term, right, and short-term movements. Now, in order to capitalize or take advantage of the short-term movements, if you have more volatility, it's better, right, as compared to a stock that don't have much volatility. For example, if you're trading some ETFs or REITs, okay, in fact, later you see that even ETFs and REITs in Singapore can also be quite volatile comparatively, right? But we need to have, if the stock has good volatility, then you can take advantage of the short-term volatility, right? Because if the stock don't have much volatility, then of course there's not much you can actually take advantage of in the short term. Might as well just hold long term. All right. That's why some stocks that have very high volume, especially blue chip counters. Blue chip counters normally have very good volume because they're always traded on or they're traded by institutions, right? They have high volume, but some of these stocks, they don't move that much. Okay, so some of the blue chip counters, although the company is very good, very strong, you might just buy and hold. It probably work better. Okay, but if the company is high volume and is a good counter and has good volatility, that's where you can take advantage of. Okay, So for this, the criteria that I put here, right? Here the average daily trading volume in the past 6 to 12 months is 1 million shares. Okay, means this share every single day there's at least like 1 million shares being traded. Okay, and the trading value for the past 6 to 12 months, okay, this is not RM 1 million. The example I'm going to give you here is basically SGD or Singapore dollar 1 million. All right. The reason why I say that, because remember I talked about manipulation, right? If the stock is trading at 1 million shares, but it's only traded at 10 cents, that means the total value that's being traded is only $100,000. Okay, so if the stock is 10 cents, you need to have 10 million shares traded. Then only you can meet that criteria. All right, so you need to meet these two criteria in terms of volume, in terms of its value. Right, so the average weekly range in the past 6 to 12 months, okay, here I put 4%. Okay, why 4? Now if you know, if you're our client, if you or if you have been following me, I normally put the volatility range more than 8%, right? That's for the Malaysian market. Now if I put a criteria more than 8% in Malaysia, you get about 50 over counters, right? 50 over counters. But if I put more than 8% on SGX stocks, okay, you only have one. Okay, only have one counter. So that shows that there are more volatile stocks in Malaysia than in Singapore. All right. So I have to put 4. Okay, even 4, then I'll show you the list and you can see what kind of volatility they are looking at. So this one, the volatility is basically the stock move at least 4% in a week. Okay, over the past 1 year. Okay, at least 4%. Okay, so the Malaysian one, I put at least 8%. If I put 4% for Malaysian stocks, you have like maybe 200 over counters. That's too many to look at, right? But here I put 4. So this, you can basically adjust this. So this basically shows that generally Singapore markets are less volatile than the Malaysian market, right? So if you are investing, maybe you could also consider, right? And you know, in Singapore, REITs are huge. ETFs are also quite big in Singapore. And these are not so volatile counters, right? So if you are longer term investors, if those who do not like a lot or don't like to go through the roller coaster in investing, right? Then the Singapore market will be a slow and steady market, right? As compared to the Malaysian market. Okay, so some people don't like volatility, right? They need slow and steady. So at least you don't see your portfolio go up and go down very fast. All right. But again, for me to take advantage of the short-term movements in trading or even in long term, I need to have some volatility. Okay. Now, how many stocks do you think that there are? Okay, I already mentioned to you, right? If it's 8%, and these are counters that meet these two criteria. The first criteria has already been met. Okay, which is all of these shares is more than 1 million shares and more than $1 million in value, Singapore dollars in value. It's only the second one, right? I already mentioned to you, if I put 8% as a second criteria, then you only have one stock, right? If it's 4%, guess how many? I'm just gonna give you a few seconds to think. Just guess. Ong Guan Hong said 50. Shan Sindran said 10. Michael Low, 1 only. Cannot be that low, isn't it? 80. Okay, meet the two criteria. Number one, he has at least 1 million shares traded daily. and value is also above $1 million. And number two, its weekly range, okay, more than 4%. Okay, weekly range. Whether it goes up or goes down, it doesn't matter. As long as it moves in at least 4% in a week. Okay, so let's just let me show you. Okay, anyways, if you guys want this list, I'll give you this list. All you need to do is to basically, I'll show you the link later on. You just have to go and WhatsApp us at the WhatsApp number. My colleague will put the number up. Okay, but I'll show you my slides later on as well. Vincent Liu 200 Brown Top 60. Okay. Let me share. Let me stop this one. I'll just share the other screen. Okay. So these are the counters. There are like 25 or 26 of them, right? Up to today's closing price, right? So you can see on the last column there, the average weekly range, we have this MedTech International here, which has 21% movement. This is quite volatile. Maybe just recently, I do not know, right? But most of them like 8%, 5%, 6%, 5%, 6%, between 5 to 8%. Okay, all of these are above 4%. Okay, so there are only 26 of them. So we can basically work on these counters, right? If you are, let's say, trading in the long term, and you can see, like, for example, we have Japfa over here. We just brought the CEO actually on our Singapore Tuesday session. The day we talked about Thai beverage, and some other counters here as well. These are more actively traded counters, and also they have some volatility. Okay, so yeah, now 20, clock 15. Yeah, I can see those from YouTube as well. Okay, no prizes here to be won. Okay, but what I'm going to do is I'm going to provide that list of this particular list if you want to know. You just have to download them from our WhatsApp number, okay, at 603-8408-2070. Okay, I'll show them on the slides later. All right, so now what I'm going to do is I'm just going to basically continue. I'm just going to take a look at some examples, right, before we look at more examples later on. Okay, so we have one counter over here, right? This is a Singapore counter. So this is the price movement, right? And you can see the price here moves in a. If you do not know charting and all, then of course it's a little bit difficult to find where are the support resistance levels, right? Or what price to buy. Okay. Now, if you know one thing that I want you to notice is this. Can you see this part over here, right? This is when the volume are the highest, and what price was that? Normally at its peak, right? This is where everybody start to chase prices. Okay, even on the next day, if you look at this particular candle here, the volume was also very high, right? A lot of people have been buying in these 2 days over here, and you notice that when the prices are low, volume are generally lower. All right. So now, let's say I'm able to draw trend lines. Okay, for example, let's say this one over here. Okay, so here I can already establish a trend line. Once we have this support here, second support here, third support here, right? Let's say I miss all this one, I miss all this movement, and then suddenly the price starts to go up very steeply over here, and I know that I should not be buying here because the price has already gone up way high from the trend line, from the support level that we looked at. So what we want to do is basically wait for the price to come down, isn't it? Come down to the support level or come down to the trend line, because that's where your expected support level is, and you want to buy over there. Okay, so let's say when the price comes down here, and let's say you want to buy over here. Okay, and of course at that point of time when we buy this green arrow, this whole part here we can't see yet, right? We don't see this part here. Okay, but because the price came down to the trend line, and we know that, I think now is a good time to get in because that's a support level. And let's say we buy over here. Okay, and when we bought over here, the price rebounded for 1 day, but then again it started to come down. Okay, and again, if when the price goes lower, okay, lower than you were expecting, because I'm already expecting the price to go to lowest here already. Okay, it should rebound, because if this is the real support level, the price should rebound and it goes higher. But what happened here, when I buy here, the price go lower, so what do? So this is where the discipline has to come, right? Because the one of the problem for us not to sell, although we already have a plan, right, that we're supposed to sell. If the price doesn't go down and make a new low, we sell, but it's always very difficult to sell. Okay, because of one simple reason. If I sell now, what happens if the price goes up tomorrow? So that's why we always think that, you know what, I think I'll wait for tomorrow first and see lah, you know. Maybe it rebound tomorrow, so we wait for tomorrow, because we're always scared that when we sell, the price rebounds. And there are a lot of times that this, you know, this happened to me. I'm not sure whether it happened to you, but a lot of times it happens like that, doesn't it? When you sell already, okay, the price go down the next day, fantastic, lucky I sell. But then suddenly the next day, it just boom, shoot up. It can happen. Okay, that's what we fear the most, and that's the reason why we always say, you know what, wait for the next day and see what happens. Okay. So if the price keeps on falling and keep on waiting and waiting and waiting, your losses will just get bigger and bigger and bigger. And then what happens? Then the risk becomes unmanageable, right? We're supposed to lose this much, but now it becomes this much. Then I'll be thinking to myself, you know what? This company is good, huh? How fundamentally strong one? Okay lah. Just buy and keep for a long term, right? Or average down somewhere and buy for long term. Yeah, if fundamentally yes, but you have to wait for long term, right? At least 3 to 5 years, maybe. It will come back, right? But then again, you're not following the trading principles anymore, right? Okay. So if I really have the discipline, I have to cut here. So at least I'm still better off than those who buy at the high. Right, and imagine this: there are a lot of people buy here, right? Because that's where the volume is at the highest. Okay, and then the price goes sideways. So I do not do anything first now, is because now the price has gone below that trend line, is still bearish. But during the sideways formation, it formed another trend line. And here, when the price falls down, it gives you another opportunity. Question is, can I buy here? Right, this trend is already over. This uptrend here is already over. Okay, this is the new trend that's developing, and this is a sideways trend that we looked at in the first examples that I've given you. Question is, can we buy over here? Now, if our first trade is a losing trade, right, we will have doubt here whether this will work or not. Can this work? Because the last time I bought on that trend line, I lost money. Although I lost a little bit, right? Not so bad lah. Okay. Now again, you compare, right? Whenever the price is this high, you see the volume is normally at the highest again. A lot of people buy when the prices are high. Okay, and the price is starting to pull back over here. Question is, can this support work? Okay, so that's one of the reasons why if you ask a lot of traders, right, they always say discipline is key, isn't it? And this is the discipline that I'm talking about. Especially if the trades that you made earlier, you have really lost those trades, it's always difficult, right? Because whenever we start to lose money, our confidence level get lower and lower and lower. And that's one of the reasons why in trading, money management is also very important. All right. If you go and silang over here, that means you can whack everything over here. You can hood over here, everything, right? And you lose a lot of money. Then, of course, the next trade is going to be very difficult. Okay. But if this is a level that you can tolerate, okay, the losses you can tolerate, then when the next trade comes, you know what? No problem. Because I've already accounted for the losses. I already accepted it. Okay. Now I just have to go on. Okay. So if you don't make a trade here, of course, you're not going to make money or not going to lose money. But if you make a trade here, I'm not sure whether I'm going to make money or more. I'm going to make money some more or not. Okay, there's always this dilemma, isn't it? Okay. So what happened here? Okay, this was the movement that we looked at, and if you bought here, the prices start to rebound. You can see the support level was strong and it start to rally upwards. And this movement here in a matter of less than a month has already gone up more than 30%. Okay, so if I do not buy here, okay, if I do not buy here, then I'll be kicking myself. Because if I don't buy here, okay, I've already lost money earlier. I am not be able to cover the earlier losses. Okay, I could have covered the losses and make even more money here, but I did not. Okay, but if I bought here, then fantastic. I already covered the earlier losses. The earlier losses were small. Okay, but now I'm making at least 20-30% over here. Okay, This is the dilemma, because the problem is we don't see the future, right? We don't see what's going to happen next. Like when I show you this chart over here, okay, I do not know what's going to happen next, isn't it? Nobody knows. Okay, but what I know is that I'm buying when the price is low, at least lower than the high here in the sideways range, right? And this is about 97, 98 cents. And now it's at 90 cents. At least I'm buying lower than others. Okay. And if the price go lower, I know, for example, if let's say I buy over here at 91 or 92 cents, if the price go below 90 cents, I'm just going to exit. So my risk will be lower. Okay. But if I get right, okay, then my potential profits can be much bigger. So that's the risk that I have to take, okay, in order for me to capture the movement. So like here you see that I don't really time the market because I do not know when the movement is going to come. Okay, but I have to get ready. Okay, when there's an opportunity arise, I'll take the small risk, okay, and wait. If that support is really the support level, the price should be going up. Okay. This is example. Now another example. This is the more recent one now. Okay. This price is up to today. Okay, so now same thing. First thing, monitor. Look at this high price here. Okay, and you find out whether it's a Malaysian stocks, US stocks, or whatever stock, right? You find volume is normally at the highest when the price is also at the highest. Okay. Yeah, earlier I removed that. The earliest stock that I looked at is one of the tradable stock that is the list is called UMS. All right. This particular stock, which is now the current price, is AEM. Okay, so now same thing, right? The price is high here. I do not want to chase, but now it's going down. Okay, for the past 1, 2, 3, you can see four black candles over here. Now the price is going down. So the question is, when can I buy? All right. So if I'm gonna look again at the trend line, so I draw a trend line from here at the bottom here, and draw it. It forms a support level here, and it goes upwards. The trend line support is down here. Okay. So basically, when the price comes down, at least when it comes down near the support level, number one, I know that I'll at least be buying a price much lower than most of them who are buying at this price. Okay. You can actually draw a parallel line and just put at the top to find that resistance, right? A parallel line is the same line at the support level, but you just adjust it upwards. Okay, you can see that the price is really quite high here. I will not chase. Okay, and you know, here the price, in fact, on that one particular day, the price went up from 440 all the way to 460, right? And you know, in the morning again, people who look at the morning at 9 a.m. in the morning, they always see the price going higher, price go higher. So they keep on trying to chase the price and end up buying at 455 or 460, right? Okay, that's where the risk is the highest. And now imagine those who bought at 460 and now the price is falling to about 425. Already down 35 cents, almost 10%, about 8%. What would they be thinking? And you look at the price has gone down every day. What do you think they'll be thinking? So they'll be thinking, oh, should I sell? Should I sell? Should I sell? But here, I'll be thinking when to buy. So that's where you get out of that the group, the herd, right? Get out of the crowd. Okay, so of course this is current price. Okay, again, let me just remind you that this is not investment advice, right? I'm just basically presenting what I'm presenting here. You know, if I want to trade this stock, I basically want to wait for the price to come down to the support level down here and then get ready. And if I'm going to buy somewhere down here, the first thing that I'll be expecting is the price to rebound, right, and go up higher. Okay, but if I'm going to buy here, and what happens is the price falls some more. Okay, so like for example, at this price here is around 415. Okay, If I'm going to buy around 415, and what happens if the price comes down to 410? I'll get out because the price has already gone below the support level. Your expected support level is not there anymore. It could be somewhere else right now. I do not know where. Okay, I'll use other tools to identify them. But the moment I'm wrong, I'll just get out. All right. So trading is, you have to make this decision quite fast, right? Because the moment you are wrong, and you do not want to go against the market, right? You're wrong. I have to have the discipline to sell. Okay, but like I said again, if the price really go down to, let's say you buy at 415 and it goes down to 410, will you be able to sell or not? Or would you be thinking, wait first lah, maybe tomorrow can rebound? All right. Yeah, Vincent. So you can look at this. This is basically a shooting star, right? There's a bearish shooting star over here, and of course, those who again, people are still buying at crazy prices. I just do not know why, right? But again, I really giving you the example. People chase prices normally. They always chase prices. That's since the beginning of trading the markets, right? They keep on chasing prices. Okay. So basically that's how you find, right? And why is it important to buy on dips, okay, in the market? Yeah, whether you're trading Singapore stocks or whether you're trading Malaysian counters or whether you're trading US stocks, they are the same. Even in cryptocurrency, okay, all you need to do is draw a trend line and don't try to chase prices, because price don't move up every time. There'll be a time when there'll be profit taking, right? The price will start to correct, and that's when we are supposed to get ready. Okay. So that's basically the end of my presentation. But no, if you have any questions, you can ask me those questions right now. If you want any stock that you want to look at, we'll take a look at this and we apply whatever that we learned today, right? Don't ask me can buy or not, but we just apply and see that. And then from this, you will know whether the price is high or low, whether you be buying at high risk or low risk. All right. But before I do that, let me just do a few announcements. So if you have questions, you can just type in the questions in the comment section. All right. So in Singapore, we have a trading festival on the 27th of February. Okay, it's actually a 1 day. It's like a summit, right? It's like a conference where there'll be different speakers, including our Alvin, right, who will be there as a speaker as well. That will be on the 27th of February. And then from the 1st to 5th of March, there's actually a trading competition where you can take part and stand a chance to win up to 5,000 Singapore dollars, right? Not Malaysian ringgit, Singapore dollars. So you just have to join. The link there, I think, will be provided by my colleague in the comment section, is bit.ly/trading festival 2021. Okay, so these are some of the speakers. We have, of course, we have Alvin there. We have Jack Schwager, who is an author of Market Wizards. Okay, is one of the books that every trader must read. All right, because all these guys are, it's like a biography. All right, but of course, this guy will summarize what he has learned from all these traders, lah. Right, they have basically a few habits, characteristics, and principles that they follow. Okay. But all the traders that they interviewed in this particular book, their results of their trading are all audited. So they are real trading results. And most of those guys that you see on this book, or ladies that you see in this book, you don't hear them one. All right. These are people who trade, they make money, they just disappear. All right. So it's quite an interesting book to read. Okay. So the author, Jack Schwager, will also be in this Trader Summit. All right. Definitely I'll be there because I'm going to ask him some questions. Okay, so we have the other speakers like the head of equities in SGX, Michael Sin. We have Mike Bellafiore, who's from a trading firm, all right, and also a training firm is going to be there, and a few more other speakers, right? You can see all the list of the speakers there. So please do attend. It's on Saturday, the 27th of February. And then the trading challenge start on the 1st to 5th of March. All right. So again, those who want to download the tradable stock list that I have today, this is the number for you. You just have to WhatsApp this number. Don't call this number. All right. WhatsApp this number. So save this number into your your phone, okay, is at 603-8408-2070. Yes, this is a WhatsAppable number. Okay, for those who are interested to open an account and trade Singapore shares, these are the first two Poems and Tiger Brokers. They're an online broking firm, so you can open accounts online if you want to, right? And the rest of them, M Equity, CGS, CIMB, Interpac, Kenanga, Maybank, Public, UB Kaihen, they are all here. But you can also trade in Singapore. You can actually open an account here to trade Singapore counters as well. So these are the available stockbroking firms that you can approach, okay, if you're interested to trade in the Singapore market. Next up, if you want to find more information about SGX, okay, SGX themselves have actually a website where you can find a lot of stuff in there. Okay, they have articles, they have news articles, they have research. They have training and so on and so forth, right? It's all there, or you can even download their app. Okay, so just go to SGX website, right, and to get more information. And from us and in EquitiesTracker, we also came up or started this ET Online Campus SGX, and this is where we discussed all about Singapore stock market. All right, so in the Facebook, you just have to search ET Online Campus SGX, and you just have to request for access. All right. Okay, looks like that's all the announcements that I have to make. Okay, any shares, any questions, whether it's regarding today's first part lesson or any counters that you want to look at? If not, then I will just do some examples lah. Okay, let's take a look at the volatile one, right? Medtex International. Okay, let me just search first. I'm using investing.com. Okay, can't find this counter. Hold on. Okay, yep. Medtex International. Okay, let me just share this screen. Okay, so we have a daily chart here. Okay, so you can look at this. It's quite volatile, right? And in the past 1 year, because you look at the 1 year movement, well, this share was in early 2020 was trading about 7 cents. It went as high as nearly $2. 198 was the high before it started to pull back. And now it's moving upwards as well. Okay, hope you can see this chart. Hold on. Okay, so here we have this. Of course, you can look at the long term. You can look at the short term as well. Okay, you can draw lines, for example. If you want to go for long term, you can see that this trend initially was, from the beginning of the year until May, the trend was just steady. It's going up like that, and you know, it start to accelerate towards in May, June, it becomes even steeper. Okay, I'm just going to draw lines here. Okay, and you can see it becomes even steeper. It moves like an exponential movement, right? These are all COVID play stocks, I guess. Okay, so if we look at this particular share, remember this share was only trading about 7, 8, 9 cents, right? And you can relate this also on a glove counters in Malaysia, lah, right? When in year 2020 or beginning 2020, they all found this base here. So this stock has moved up from, you know, from 4, 5 cents all the way up to $2. That's like don't know how many times, right? Okay. And then of course here it was not able to sustain. Price start to pull back, find some support, go up here, and now it start to go down. Okay, so this trend line support level that we draw here already, the first one, the steep one, of course, already been broken, right? Okay, so this one already been broken. The first one, the second broken one, and the last one, of course, here, the third one. This one has not been broken yet. Okay, so if let's say we're looking at these movements, okay, if you are, let's say, going to buy somewhere here, and okay, if you buy at the support level here, the price goes down, you're not going to make money here, all right? And then the price went up a little bit, and then it came down, you're going to buy here again. Just let me put an arrow so you can see, right? Here's that arrow. Okay. So of course you can buy here is best if it falls at support level lah. Okay, and another one over here. Another one over here. Okay, so here when you buy, let's say the price comes down to that trend line. So I'm just going to zoom in this part here, right? Okay, this is where the price went up and it start to pull back. This is a trend line that we draw. Okay, so it pull back here, you buy here, and then after that the price goes down, so you make that small losses here, maybe 4 or 5%. Okay, and the price went up. Okay, this is what we're afraid of, isn't it? When we sell here and then it goes down some more, and then the next day it starts to rebound and says, yeah, you know, should have just hold. All right. And if you're gonna buy back here again because you think, I sold here, maybe I should buy back again, right? So if you don't have the discipline, what happens? The price come down back again. Okay. And you notice here the volume start to increase again when the price go higher, right? And then it start to go down again. And it says, you know what? I wait for the next support level because the next support level is down here. Okay, at around 80 cents at that point of time. Okay, and then we wait for the price to come down. If it doesn't come down, then you wait, price is still high. Okay, and it looks like it's coming down. Okay, and the moment it hit these levels, you know what? You can buy now. Okay, 102. Because now this corresponds with this trend, the other trend line that we draw here, right? I think can be buy or not. So if let's say we buy here also, then the price comes down again, we cut loss another 3-4% losses. Okay, and now it's just going sideways. And where would be the next support level? Okay, so I have to be very patient right now, right? Because, and of course, you can also draw some support level somewhere here, but you know, you want to wait for it to come back here again if everything normalize. Now the question is, can the price, right, from 103 here fall to 45, 47, 48 cents? You're thinking can. All right, like for example, even in our glove counters right now in Malaysia, now it's today, I mean, has been going down for I think 4 or 5 days, right? You're thinking already $6 can go down some more. Okay, remember this counter early last year was trading around 6, 7 cents. So even if it comes down to 45 cents or 50 cents, it is still quite high for those who buy below 50 cents. Yeah, of course, for those who buy above 50 cents will not think that it's high. Again, it's always two sides of a story. Those who buy at $2, Even at $1 for them now is yeah, so cheap, right? It's like half price already. I should have bought at $1 instead of buying at near $2. Okay, but the question is, can the price come down here again? Because this was the previous trend line that developed earlier before all this thing happened, right? And for most of these companies, even like glove makers and healthcare, all of this is like a harvest bump, right? And it does not last long, right? So when it comes back to its normal, will it go to 50 cents? It might. I do not know, right? It might go back to 50 cents. Okay, because that's where the normal trend is. That's when everything gets back to normal. Okay. So if I were to look for the support level for this particular counter, then I will wait for it to come down to 48 cents, and that's a long way to go. Okay, so I maybe just wait. So the thing is that if I'm able to buy here, that's fantastic. I'm able to make quite good profits, right? From 60 cents, even let's say go to 120 and I sell, that's 100% movement. All right, in just a matter of less than a month. Okay, but if I'm going to lose 3-4%, so be it lah. If I make a really lot of money, even if I make, let's say, even 30% from this movement, not this 300% movement, right? Let's say make 30%. If I lose 3% here, it's not that much also. Okay, then you just have to wait for the next one again. So the thing about trading is you try to make your losses small, right? And when you're able to get a big trend, that's where you're able to cover all those losses. Okay, so at this price, I'm not convinced yet because it's neither here nor there. I will just wait for the price to come down here. If it comes down, if it doesn't come down, never mind, because I still have another stock to look at. All right. Okay, let me see your questions. Yeah. Just want to ask if a technical graph showing shooting star confirm it's bearish. Now, sometimes you can have a shooting star, the price can still go up, okay, depending on there are a few criterias, right? So, like I say, if you have attended the trading program that I have, when I use candlesticks, I will also use some other indicators to confirm. All right. But generally, yes, when you see a shooting star, normally, especially when the volume is high, then it's probably going to come down. Okay. OCBC, all right. I can take a look at OCBC. Okay. Yeah. Okay, Miss. Okay, so OCBC, so you look at over the long run, it really doesn't move that much, right? Right now the price is like, if you look at the range, right, for the past how many years here, over 10 years, right? Okay, let's take a look at this on the 10 years. The bottom range is down here. Okay, so that's the if you look at the long term, right? So when the price goes to around $8, I mean, if on hindsight, lah, right? In of course, most of the counters went down to below this level in March last year. Okay, during the pandemic, when it started, right? So the price came down to its lowest level in history. Okay, it's like a public bank going to, of course, public bank don't go to the lowest in history, but OCBC actually went down quite low, right? And of course, here it started to rebound. Okay, now if you look at this range here over the long run, Okay, prior to 2018, you can see the market is really bullish. Price went to around nearly $14. Okay, so now it's trading at this level. So now if you look at the price, it's somewhere, it's like in the middle, right? So it's trading at the average in the long term, at the average price. Okay, and if you think that this is a counter that you want to look for, if they, I have not looked at the fundamentals of this company. It's just basically now looking at charts, right? Question is, if everything back to normal, can the price go back up to $14? Okay, so what you are looking at now in the long term, you see that now you're buying at the average. Over the long term, you're buying at the average. So it's neither high, neither low. Okay, and you only see that prices come down to the bottom level below $8 only when there's a crisis. Okay, now if in the short term, then you can also draw lines. Okay, you can see the price is starting to develop into an uptrend. Okay, now it pulled back and now starting to go up. So question is, can this trend continue? Right. So if I were to draw a trend line, sorry, this zoom button is just a little bit weird, so bear with me. If I were to draw a trend line, okay, you can see the price goes up. Okay, it comes down. Of course, you can't buy here because that's only the reference point, right? Because at that point of time, you do not know whether there's actually a support there or not. Okay, there's no way we can buy. Let's say we can't buy here, right? We can't buy here because at that point of time, I do not know. But you know what? If you really look at it, you can actually buy also, right? At this level here, why? Because that's when the price start to go sideways. Right, and when it goes near 990, the support level, that's when you should be able to buy. Okay, because if the price now you know that the support level, for example, at this particular counter, this is of course history, right? If the price, you know that the support level here is around 990, okay, and for the past 1 over month, okay, nearly 2 months, it has been supported above 990. So if I'm going to buy near 990, I'm going to buy, let's say, at $10. Do you think your risk is low or not? Right? Because if I'm going to buy at $10 and if the price go below 990, I'm going to lose 10 cents, which is only 1%. Okay, but the potential, if let's say this is really a support level and the price goes up, will you be able to be good money if the price do trend upwards? Okay, so this is the same example that I gave you earlier in the first chart as well, right? When the price goes sideways, of course, this trend line you cannot draw yet because this is not, you don't have any point here, isn't it? Okay, but the price just goes sideways and you can draw a trend line here, okay, because in the sideways trend, a support level has been established at 990. That means whenever the sellers sell 990, the buyers come back again. Okay, it push back down to 990, it rebounds back again a few times. Okay, in fact, 1 time, 2 times, 3 times, and now there's a 4th time. Okay, so only on the 4th time you see the price starts to really rally. Okay, so it's now at the current level. So right now, again, if you look at the sideways movement, you have to wait for this to be established again. But right now, we only have 1 point here, right? So I cannot tell yet. Okay, at 1018, there's one support level here. So I need to wait for it to form like a trend, a sideways movement like this to find where the support level is. Okay, and normally a blue chip counter is like that one. They always go sideways for some time and then move, sideways for some time and then move. You can see a few times like this, right? Like here, for example, in 2019, this was the support level until it was broken here. See, the important thing is when a strong support level, like for example, this whole 1 year here, the support level has been above 1050. Right? 1050, 1050, 1050, 1050, 1050. Only here when it broke below 1050 and then that's it, finish. The price came down. Okay, so these are some of the clues that I need to look for in the market, right? Here now is correcting, so I just have to wait for this pattern to form and see whether there is still good support at 1020 or not. All right, then I probably want to buy around at 1020 because that's where my risk is lowest. because I know that the moment the price breaks below 1020, I know the support level is not there anymore. I better get out. All right. Okay, Alibaba in Singapore, no Alibaba, that's US stock. So we can talk about Singapore shares today. We don't have. Maybe next time we have US market lah, but here we are talking about Singapore shares. Right, so I hope this will give you an idea. Of course, this is just the foundation, right? This idea you have to explore it further. All right. So again, reach out to us if you wanna. I mean, we do have training programs for trading like this, right? How to actually develop trading plans using charts. And in fact, we're gonna have this on at the end of this month. Okay, if you're interested, to attend the program at the end of this month, you can just indicate. You can just type in TCP because the program is called Trader Circle Program. TCP. If you type in TCP, then our colleague will get in touch with you, okay, and to explain to you further about the program. All right. So I hope that this will give you an idea of what to look for, whether it's in the Singapore market, and of course, in the Singapore market, you just have to find, the support and resistance levels, especially in counters like, for example, like you look at OCBC, right? It moves in certain patterns. It moves in stages. All you need to do is identify where the support levels are and try to trade near the support levels, because that's when your risk is the lowest. Okay. So thank you so much, guys, for joining us tonight. I wish you guys all the best. And if you're interested into the Trading Circle program, thank you, Harvin. Just type in TCP. Our colleague will get in touch with you to explain to you further. All right. So till then, have a very good night. We'll see you again next week. And happy Chinese New Year for those who are celebrating. See you again.